All right, so the report yesterday that the government had less than $50 billion in the till, I think it's created this sort of sense of urgency on both sides of the aisle. And of course, it's making the market, really the market can smell a deal is going to happen really soon. And that would avert any sort of unnecessary nightmare. Now, the drama has also diverted attention from a string of economic data, not just today, but all week long, that has now pushed consensus. Now, the conventional wisdom is we'll get a rate hike next month. Now, this kind of development, I mean, come on, think about this. This kind of development has been knocking the stuffing out this market all year long. So, I mean, and by the way, on a 3-day weekend, it really should be down. So is this a paradigm shift? I mean, is good news back to being good news? There's a lot to ponder here. So let's bring in Bianco Research President Jim Bianco. First, Jim, let me just start with the debt ceiling. I mean, when we have these conversations, people say almost as a matter of fact, yeah, it'll get done. Don't even worry about it. But we're playing it close to the vest, aren't we?
We always do. That's the way Washington works. They have to make it at the 11th hour, 59th minute, write the bill hastily, give nobody a chance to read it and pass it. And so this is just more of the same.
But Kevin McCarthy said he's going to give folks at least 72 hours. So, and that, by the way, that brings in that tricky X date. I don't think anyone believes it's June 1st. Obviously, if they did, we probably would have a deal. But in 2011, which everyone talks about, we did get a deal. We had a deal with 48 hours ago, but the damage was done. The reputation was already hurt. Could that sort of thing be a post-deal, situation where it continues to linger?
Oh, yeah, I think it definitely can, because post-deal, we're going to have to raise about $1 trillion. We're going to issue $1 trillion of Treasury securities over a month or maybe 6 weeks. That money is going to come out of the banking system. That money is going to come out of potential investments. Now, eventually, that money gets recycled back into the economy. But the first thing it does is it pulls it all out. And historically, whenever we've run up against these debt ceilings, that's been disruptive. And I would expect that to be the same too over the next month or 6 weeks. We'll see a little bit of turbulence associated with that.
Let's talk about all of the data out there. I mean, it's getting so confusing. First, your thoughts on inflation. You had just about everything out this week came in hotter than expected.
Yes, starting with the inflation data, if you go back to the UK's inflation report on Tuesday through the PCE report today for the United States, it all surprised to the upside. There was some surveys out that suggest that people are starting to think that inflation is entrenched. And the takeaway, which is why I think the market is now pricing in a rate hike for June, is the inflation problem is still with us. It's not a 9% problem like we had last summer, but it may be a 4% problem. And that's completely unacceptable for a Fed that's targeting 2%. So we're looking for more rate hikes.
So we got more rate hikes, and you posted a chart on the bank walk. That really isn't over yet, right? We still have gobs of money. I think the last tranche was like $41 billion into money markets. So all of these issues that have put a tremendous amount of pressure on the market, they're still out there. Maybe have gotten even worse to a degree. Is this completely being offset by the debt ceiling, or is there a different mindset out there that says, okay, we're okay with one more rate hike?
No, I think that there's a bifurcation in the market, to use a fancy word. You've got 8 or so AI ChatGPT stocks. The majority of the stock market gains this year have been Apple, Google, and Microsoft. That is the majority of the whole S&P's gains is those 3 stocks. Then if you get a while, the parlance we like to say on Wall Street is the S&P 495 or the S&P 490. The other 95% of the stocks, they're down. They haven't done anything. So the market is really struggling. I think this bank walk and the struggling with the banks and the struggling with real estate and the uncertainty about the economy is impacting 490 stocks. But 10 stocks like NVIDIA yesterday putting 180 billion plus on its market cap is enough to pull the whole index higher. And that's the dynamic that we've seen this year, and especially in the month of May.
Yeah, and it continues. The big question is, will those 10 stocks run out of steam, or will somehow they find a way to, bring the rest of them in? I'm looking at names like Goldman and others. So, maybe, just maybe, they can be influential enough. Jim, always appreciate you. Have a fantastic 3-day weekend.
You too, sir.
Hey, later in the show, folks.